The Birla Group has become the first largest conglomerate to convert its holding company into an operating NBFC. This after Aditya Birla Capital got the board's nod to merge with Aditya Birla Finance and itself. This amalgamation will ensure that the entity is in compliance with RBI's scale-based regulation. But what exactly is this scale-based regulation and how will it help the NBFC as a whole? Let's find out. Also, don't forget to like, share and subscribe to Moneycontrol's YouTube channel for more such content. Aditya Birla Finance Limited is a wholly owned subsidiary of Aditya Birla Capital Limited. Now, whenever this amalgamation comes into effect, it will create one large unified operating NBFC. However, this amalgamation is subject to regulatory approvals. This means that Aditya Birla Capital will get converted from an holding company to an operating non-banking finance company or NBFC as we know it. For those uninitiated, Aditya Birla Capital oversees assets under management or AUMs worth 4.1 lakh crore rupees, while AB Finance's total assets come up to 1,400 crore rupees, which means we are talking about a total AUM of a combined entity which goes on to cross that 5 lakh crore mark to become one of the biggest NBFCs in the country. So while AB Capital is the non-deposit taking core investment company, Aditya Birla Finance offers end-to-end lending, financing as well as wealth management solution. Also, the merger is pretty much in line with Reserve Bank of India's scale-based regulation, under which Aditya Birla Finance was to be listed on the bourses by September 30th, 2025. But now with this merger, the listing of these companies is no longer required. But what exactly were RBI's guidelines? Aditya Birla Finance is one of those 15 NBFCs and housing finance companies which gets classified as the upper layer of RBI's scale-based regulation. When classified as an NBFC UL, RBI's rules stipulate that the NBFC go public within 3 years of this classification. So what really changes for the two companies and how will business shape up post the amalgamation? Well, upon the scheme becoming into effect, Vishakha Mulye will be the Managing Director and CEO, and Rakesh Singh will assume the role of an Executive Director as well as CEO. Now, experts Moneycontrol spoke with said that yes, it is a segment heavyweight that would be created, but that would not go on to have any significant impact on the sector as a whole. As for brokerages, Morgan Stanley has given an equal weight call for the stock with a target price of 196 per share, whereas Jefferies has a buy call and has raised its target price to 225 per share. As for the stock, Aditya Birla Capital did get that boost post the announcement, gaining close to 4% in trade.